Today, I'm going to show you price action, how I perceive it, and how I try to capitalize on it, which means making some money from it. That's the foundation, the basics of trading. Here, I'm noticing on a yen pair, on the hourly time frame, that the structure is an uptrend. Then we entered a corrective phase, where there's this nice spike. That spike usually signals that the trend is starting to end, that it's about to break, but there's no strength left to continue in that trend, especially when we're going sideways now, that sideways movement. This means that I'm watching both directions, but it wouldn't hurt to trade short down here because it looks like the trend is running out of steam. And now, at this moment, we are currently in a corrective part in this particular phase where I strongly believe that I definitely have some solid support right here. I understand here, and here I have some resist part somewhere, but this shot is like this. There's an extra gap here. It's kind of ugly. That's the upper part, kind of annoying, but it's like a shot outside the structure, an immediate return back. That usually reminds me that we could really be nearing the end, that the trend has truly run out of steam. We've tried to push it too much here, but we've rather entered that corrective phase. I rather expect that we could trade short. The long is less likely. Let's take a look at what the market has brought us. It tested that support again, okay? As long as it stays like this, that's nice. As long as it remains in that corrective phase, I don't want to trade. The corrective structures, when we are in the internal structure, are less clear to me. But this is already a clear signal for me, or rather, it interests me in the market that we've broken out of that structure. We're outside of it now. And now I would like to see some pullback. So let's wait and see if the market happens to return back immediately. You can see that it's not like a downward arrow followed by an immediate return upward. I don't expect this to be a false break. We already have falling red candles here. We have green candles, and now I would like that pullback. Somewhere here is the point of interest where I would want to go short. And again, we'll place the stop loss just above that breakout candle, classic. We'll place a pending limit order in front of that zone and set the take profit at 2.1. The money management is set here because we've seen that we've been in an uptrend for a long time. That means there's room to fall, and that space is there. I'm not going into any unknown territory, so let's try to set up that trade. So short term. We'll strategically place the stop loss just above that significant breakout candle, ensuring it's positioned right behind that previous swing high. This is a crucial step in our risk management strategy. Additionally, we aim for a 2-to-1 take profit ratio, which is a common practice among traders to maximize potential gains while minimizing risks. Let's see if I hit the stop loss or take profit. It's the classic break retest that you know from my videos. It's falling beautifully. I really like it. So that's it. That's the ideal situation, yeah. And now I'm a bit worried because that swing is all the way down here, which means if there's a retest, I expect that take profit to really hit down into those levels, you know. Even though trading happened here, I still like to see that there has been trading here recently when it comes to the actual trade. As if current time. All right, and now please slowly and carefully come back to where you were. The price is expected to soon reach that test. Already, not yet, maybe even now. It jumped. It, in a way that, to a certain extent, respects that zone less in comparison to other areas. Yeah. It'll work. And again, the standard for that breakout exercise here in these areas. We're safe. That stop loss was 2. It's not good to completely tighten that stop loss. In trading, it's crucial to set a stop loss to protect your investment. This is the point where you decide to cut your losses if the market moves against you. However, when the market trends in your favor, it can be disappointing if you haven't adjusted your strategy to maximize potential gains. It doesn't want to go down, but it's pushing up. This is nicely symmetrical when we take it symmetrically as a pullback. The current scenario we are experiencing is indeed quite favorable and pleasant, offering a positive outlook. It is anticipated to function effectively and as intended, aligning with our expectations. This situation is primarily a matter of management and oversight, ensuring that all processes are running smoothly and efficiently. Well, great. Win. Victory is at home. We were planning for 2 to 1 again, somewhere around here. And the price really did reach that swing. That's what I like, and when I see beforehand that the price really reaches that potential profit, that there was currently trading going on, there's a desire to trade there. It's a good spot for me. This trade worked out beautifully, 2 to 1. It was an intraday trade. It's true that it lasted about 2 or 3 days. It lasted longer than usual, but 2 to 1 at home, that's more like it for the trade. It was a clear, nice situation. It wasn't complicated at all. I don't like complicated situations. We like those simple situations where we just reach a point in the price action without unnecessarily complicating things, where the clarity and simplicity of this strategy is maintained. The zone was impulsively broken, and the retracement from that zone allows us to safely place the stop loss somewhere behind that swing or the broken candle, which we adhered to 2 to 1 we kept. And we beautifully fit into the end and take profit. That sweet reward was at the end. So today, another successful trade. These strategies aren't just about take profits. There are also stop losses involved. It's not a 100% strategy. I don't know 100% strategies, or I do, but I don't trade them. It's very financially demanding. But this is just a simple strategy for everyone. So here's to the breaker test.